wages growth is still starting from a pretty low level, so it's going to take some time to feed through. And 5.2% unemployment, whilst we expect it to fall back below 5, still gives them a little bit of a buffer, or a little bit of time, if you will, to see how these numbers span out.
Tony Morris with that instant reactions. Value it. Many thanks.
Thank you.
We'll take a short break. Of course, my panel of experts are with us for the rest of the show. We're going to look at the state breakdown, just who's ahead, who's dragging the chain. Plenty more to come after the short break. Yes, okay.
Asking for a pay rise.
Sorry.
Simon, pay yourself more.
Yeah. Peter?
Yes, Carson.
Peter, just we'll come back to you in a moment. Thank you.
Thank you.
All right. Yeah. Welcome back to our continuing coverage on jobs. We've seen employment rise 26,900 for the month of May. We're continuing to look into these numbers and their implications for the broader economy for the rest of this hour. I want to just bring you across market action meanwhile, which doesn't stop. It is still the case that the 200 is showing good support. That's in spite of bearish leads to work off. When we came online this morning, an 0.8% lift on the 200. All odds pushing a 0.75% rise. And New Zealand, for its part, is nudging a 1% gain there to 30.29 and change. Benchmarks around the region, well, yesterday, not terrific performances. Certainly the 225 in Japan was off 1%. There's been a bit of a bounce back, though, to the minute of sorts. 0.3% clear. We did see Shanghai's composite, though, of course, responding very favourably to that leaked news on the economy. So too Hong Kong's Hang Seng, which tacked on about 0.75%. Composite means to the moment is flat. The Kospi is just treading water. Crude price spiked overnight. We've got a good print on a drawdown in inventory, so it's just showing that there is somewhat a denting into that build-up that has been such a problem for producers. It's all been sitting idle in Cushing, Oklahoma, but finally they're starting to eat into that. Also, that good news on China, just boosting some optimism about use for that commodity. So too the copper price, which did rise on the London Metal Exchange. I'm not sure if we've got that chart for you. Yes, we do. It's just reversed course since. And gold's going back up now, having lost about 12 or 15.70 an ounce, actually, overnight. And our dollar popping above 83 US there on release of those jobs numbers. Was kind of towards the upper end of expectations with that print of 26,900 for the month of May. Immediate reaction for the A dollar with a spike up to 83, but Tony Morris from ANZ saying ultimately it'll be consumer prices and that index that's the Reserve Bank's going to perhaps give greater credence to. Positive, though, response to the view that we've seen that shift continued into full-time employment, with just on 36,400 people making that switch. Hours worked nudging higher as well. Now back with my panel to just look further into these numbers for you. Jason Johnson's director on the global board of the Association of Executive Search Consultants, AESC, Simon Boulton from Equalis Consulting, and in Perth I've got Peter Gleeson from the Chandler McLeod Group. Peter, I'm not sure first to you whether you've had a chance to look at the breakdown state by state, but you know, if you reflect on last month and where Perth sits, are there any signs yet that our employers are doing what some of the big bosses of these mining companies have done, and that's say, look, there's a real sense of these projects and jobs with them being canned?
Look, I think just generally there's been far more conservatism around any sort of investment, and of course I don't think we've seen the actual impact yet of the ramification of the changes to tax, because there's still a lot of discussion, but there's no doubt that it causes uncertainty in the marketplace. So I think generally confidence, employer confidence is down. Having said that, I think that's where we see with some of these new positions actually being created is probably a realisation that they're not going to get exactly what they originally wanted. They must get some people into the positions that they have available. So some of these I think are basically as a consequence of having been looking in the marketplace for some time to fill jobs and then making the decision ultimately we have to get somebody into the job.
All right, let's see whether my panel here in Sydney agrees with that. I mean, from what you heard there, Peter saying, was there anything that you strongly don't see eye to eye over?
Well, what's interesting and possibly a real contrast, if we look at New South Wales, we're down from 6.4 a year ago to 5.2 now. And I think what reflects there is that financial services has come back quite strongly, certainly relative to other industry sectors, and is driving a lot of the jobs growth from New South Wales, which is the engine for financial services in Australia.
Yeah.
And I'd agree with that. Financial services, perhaps surprisingly, was one of the first sectors to bounce back, and also a lead indicator, I think, on how other industries, other sectors will then perform. It also, though, is where pay rises and bonuses have really been used as retention tools, but now also as attraction tools. So people that perceive themselves to have been underpaid, overworked, are being lured with big salaries, big bucks on offer by the competitors.
And those demands are being met anecdotally, or there's having to be a bit of reassessment about expectations versus reality?
I think it always,
how are you reading it?
I think it always depends on that balance. And while the power or the choice is there for candidates, it will always be pushing up those salaries. I think that the advantage has really swung towards job seekers away from the employers, which is what it's been for such a long time.
Peter, to you in Perth, back to you, Peter Gleeson from the Charter McLeod Group. Is it the case that because of the RSPT uncertainty, this is now perhaps a stick that employers are using candidates to say, look, temper your expectations. You're not going to get the 80k to clean a toilet up in a mine any longer.
Look, I think that it's going to be interesting to see whether that is the case. I think the dust really hasn't settled on that whole issue. But the reality is the examples of cleaners getting six-figure amounts in the northern Western Australia hasn't changed. There's still an issue of attracting people into those locations, and there's a whole I suppose potpourri of needs for additional labour, whether it be the refugee crisis, whether it be the mining industry. There's a general shortage of people in those areas for those menial tasks. But it goes beyond that. It's certainly the same in the more specialised areas, the engineering areas as well. So, I think the other thing I just mentioned on financial services is that we've actually the financial services sector has become very unattractive during the downturn, the global financial crisis. So one of the reasons we're having to attract people back is one of the ways is through additional finances, and it's mainly, interestingly enough, in our experience, wealth management. So that part of the financial services sector,
everyone is crowding in on that and wanting a slice of the action when it comes to our banks, of course. Just to clarify, gentlemen, because it has struck me, and this is quite an interesting statistic, we've now clocked in the biggest one-month rise in hours worked since May of 1988. Now, just to tell viewers what that means, the significance of that, just run me through. When we see a print on that, the hours worked rising 2.9% in May. It does follow falls in April and March, but still that's a hard statistic to ignore.
It is, but I think that there's more work to do. Industries are recovering, workloads through the downturn have certainly been less, which is why organisations have been able to do the work with less people. But now, as there is a recovery, as things are getting better, the workload's increasing. So people are working longer hours. There's more work to do.
And when you see an increase, I guess I'm wanting to understand what that statistic then means for the broader debate we were having about wage pressures. Does that give the licence to a push? Is this an early warning signal?
Absolutely. I mean, we're seeing greater productivity. People are working harder. Right. They've got a greater case to take to their employers.
So there will come a point, in other words, where these employers can no longer use the fob off of, well, times are tough. You're throwing more work at me. Hello. There's
Absolutely.
clearly business coming through your doors.
Yep. And I think through the tougher times, people didn't have the choice